Hello traders, welcome to Quantsap. My name is Diljit and today we're going to talk about how the big players or the smart investors, how do they catch big momentums. Okay, so whenever a big momentum is coming in any kind of a stock, generally the big players are actually playing the good action and you can also catch those momentums very easily with the help of the Quantsap. So before jumping on the video, if you haven't signed up Quantsap as of yet, you can sign up now as you'll unlock 20 plus free tools. And if you want to know more about Quantsap, you can go here in the learn section and here in the video library and you can check out the multiple videos of how Quantsap works and how the tools help you in your option trading journey. And if you want to know more about Quantsap, if you have any doubts or queries, you can call us, mail us on the Quantsap support and we might try to help you out with your further queries, right? So let's jump on to the video and let's understand how these big momentums have been catched. Okay, so firstly I would go on the blackboard. Okay, so big momentums. So big momentums, whenever you need to catch any kind of a big momentum, you need to have 2-3 things in mind. Okay, so firstly you need to check out the build-up of the stock. Okay, so it is very important that the stock is following a good build-up. So firstly you need to check out the build-up. Okay, so analysis of build-up, you need to see at least of last 10 to 7 days. Okay, so last 10 to 7 days build-up, you need to see that if the particular stock is having a long unwinding pattern on a bullish side or short covering pattern on the bearish side. Either of those pattern, whenever you will see, okay, let's just suppose you are seeing long unwinding pattern, that is suggesting you on the bullish side. Similarly, if you are seeing short covering pattern, okay, so this is suggesting you on the downward side. So this way, basically, if the stock is following a pattern for the last 10 days, it might continue the pattern or it might continue the particular trend. Okay, so you need to identify firstly that which particular trend the particular stock is following. And when you need to make an entry, you can use the trap indicator tool. Okay, so your next point should be trap indicator. Okay, trap indicator is the tool basically will help you for the entry and exit. Okay, so entry and exit. So for entry and exit, you need to use the trap indicator. Now, how do we analyze or how do we do the system? We'll learn in the concept. Okay, so before that we need to understand what is trap indicator. Okay, so generally, as the name suggests, it detects the traps. So what kind of traps we are talking about? So there are two type of traps. One is the call writer's trap. Okay, second is the put writer's trap. So call writer's trap and put writer's trap. So basically the writers what we are talking about are the sellers. Okay, so as you are a buyer, okay, if you are an option buyer, you are having a limited risk profile. Okay, so limited risk profile. So in easy words, it would mean that if you have paid 100 rupees premium, let's just suppose. Okay, so that means you know your maximum loss can be 100 rupees. So if it goes to 0, that will be your maximum loss. Okay, but that doesn't be the same for the sellers. Okay, so if you are a seller, you are having an unlimited risk profile. Okay, so unlimited risk profile. So seller is having an unlimited risk profile. So that makes it very risky for a seller to make any kind of positions. Right, so what you need to keep an eye is that if the seller is having an unlimited loss, that means their risk appetite is very less. Okay, so let's just suppose if they are selling 100 premium, let's just suppose 100 premium option they are selling. Okay, so that premium can go to 1000 also. So you need always the sellers try to be on a safer side. So that's why this call writer's trap and put writer's trap is very important to catch a momentum. Because generally wherever you're seeing a trap, that means the call writers are trapped. That means the call sellers at all the strikes. Okay, let's just suppose this is the option chain. Okay, so you're seeing call sellers are at many levels. Okay, and similarly the put sellers are marginally a little less. So these call sellers are having, again they are also having an unlimited risk profile. So they want the market conditions to be either sideways or downwards. But if the market is going on the upper side, okay, if the market is going on the upper side, they are starting to face losses. So what they'll do is they'll start to unwind. So what we'll see is writer trap. So these call writers will be trapped and they'll start unwinding their position. So what will happen here is that basically whenever the call sellers are exiting, call writers trap is indicating you that if the call seller starts exiting, okay, so if the call seller is exiting, that means somewhere as a call buyer, you can make an entry. So if you are seeing a call seller trap and call seller starting to exit, you can make an entry as a buyer. Okay. Similarly goes with the put writers trap. Okay. But now we are talking on the opposite side. Okay. So in the put writers trap, we are talking about the bearish side. Okay, so now the put sellers here in the option chain, the put seller are having the unlimited loss profile always as again. Okay, but now they are starting to face losses because their expectation was the particular market will be sideways or on the upside, but now the market has started to come on the downside. So the particular stock or the index, if it's going on the downward direction, so these put sellers will be facing losses. So what we'll see is that they'll start unwinding their position. And as they'll start unwinding, you might see a price to go on the downward side and you can make an entry as a put buyer, right? So I hope the concept of trap indicator is clear to you. If you are seeing the call writers are being trapped, you can make a bullish position there because somewhere you can see an upward momentum. If the sellers are exiting, that means somewhere you are seeing a free sky and you can go for a higher trade or a long trade. Similarly, in the put writers trap, what you're seeing, the put sellers are exiting. So the support is generally going. So whenever the support is gone, that is the time you might see the price to fall downwards. So that is the time you can go with a put buying, right? So let's go to Quantsap and understand how this particular tool works and how you can refine stocks and how you can make and trade entries, right? So you can come here in the queue. You can directly go on the trading section and here you can see trap indicator and the quant models. Okay, so as you can see, this is the interface here. As you can see, there are many trades suggested you here. Okay, as you can see, there are so many trades. You can see there is if you see on the last of the trades, you can see there are good returns, almost 34, 24, 15%, 13%, right? So to catch such big momentums in the stocks, trap indicator is a very important tool or a very good tool to help you out for this. Okay, but you need to pre-analyze the particular stock before and then come on the trap indicator. So what you're gonna do is, as I suggested you earlier, that firstly, just a second, as I suggested earlier, that you need to firstly see the built up of the last 10 to 7 days. Okay, so we'll come in the built up here. Okay, you'll come on the track and you can check out the built up script symbol. Here you can come on the cycle. So now you're seeing last 20 days data. Okay, we'll change it to last 10 days. So we are seeing the data of the last 10 days. Okay, but now you don't need to manually analyze it. You can simply go on the reading and you can select here. So as I said that in the long unwinding, we are seeing on the bullish side and short covering on the bearish side. Now that we are seeing the market is recovering, so you can check out the bullish side stocks for the further trades. So you can check out the long unwinding, and now you see there's a new window come here of the count. So count is basically out of this 10 days, how many days you need to see this pattern. So that should be minimum of 70%. So 10 and 7 it should be. Okay, so as I apply here, you get stocks, refined stocks, which are showing you on a bullish pattern. Okay, so any of these stocks are showing you the bullish pattern and you can go forward with the stocks and you can initiate trades if you are seeing the similar signal in the trap indicator also. And if you want to be more precise here, you can check out the sector cycle also. So now as I have checked the sector cycle, I have seen IT sector is performing. So what you can do is, the cycle of IT sector is performing, so you can directly go to the IT sector itself and you can check out the stock which is showing you the bullish pattern in the IT sector. So as you can see, there is LTTS and Emphasis are the two stocks which are showing you a bullish pattern. Okay, so any one of it, if it's in a trap indicator or if there is any kind of trap generated, you can basically make an entry here. So let's just suppose LTTS, if we talk about LTTS, just a second. So as you can see, LTTS has already, signal has been generated here. You can see the call writer's trap is generated here. Okay, just a second. Right. So you can see LTTS, you are already seeing a call writer's trap already being generated. And as we have checked out the last 7 days pattern also. So last 7 days is also showing you a bullish indication. Call writers trapped hai, that means somewhere the call sellers have also exited. So you can make an entry as a call buyer. Okay. Now when you will make the entry, so the signal date is suggested to you. So whenever the signal date is given to you, on the next day you can make an entry if you are seeing the bullish conditions are matching. So let's just suppose if you are seeing bullish patterns, let's just suppose bullish engulfing or any kind of a bullish big candles you are seeing on the lower points, you can make an entry here. Or let's just suppose the previous day high is broken. So that is the time you can make an entry. So as you can see from 21st, it has given a signal. Okay, so I believe 22nd was Friday. So you could have initiated a trade on 22nd, and as you can see, as of yet in 2 days, you would have gotten 4.3% of returns, right? And still the trade is on. So whenever the particular signal is suggested to you, you can make an entry here, but you need to check out the last 7 days built up. And with that, if you are getting a good confirmation, you can initiate the trade and you can get to catch these kind of a big momentums by yourself, right? So I hope you got the concept. Thank you so much guys for watching. Do like and share, and if you like the video, just press the like button. Thank you.